back. We got about 2 minutes before we get started with trading. Jim, the banks, of course, have still been a relatively strong part of the market. Energy also has been hanging in there. I did notice Jefferies' numbers. We don't talk about it that often, but it's gotten to be a fairly large market cap now at this point. They blew it away. I mean, just crushed it. They had a 43.5% return on tangible equity.
It's incredible.
43.5%. And all the numbers, as you might anticipate, and we can take a look at them in terms of investment banking. And one reason why we do like to look at this as well is it can be at least a reflection of what we can expect from the larger banks when they come. But, advisory equity underwriting, that doesn't put in perspective the year-over-year comparisons, which is really what we were trying to show here. But you can see where we are, what they were doing. I mean, the numbers were up 80+%.
That's why I don't like this idea it's value versus growth. It's not. It's upside surprise companies versus companies that are going to deliver okay earnings. Richard Handler, David, he has made this, it's not a renegade firm. I mean, Boyd Jefferies, I knew Boyd Jefferies pretty well when I started trading. Yeah. Boyd Jefferies was a scrappy guy, a great guy. Richard Handler's put together a powerhouse. And I've got to tip my hat off to him. His dad was my accountant for years and years.
I know. I remember you said that many times.
Oh, his dad was the greatest. And I've got to tell you, this is emblematic of
By the way, they benefited from middle market stuff. They benefited from the SPAC craze, and many firms have. And so we'll have to wait and see if these numbers, it doesn't appear that they perhaps will be sustainable.
Is it peak?
When you have 81% capital markets net revenue over what was a record a year ago anyway.
Yeah.
There's the opening bell. You hear it right now. It's the big board. SEMrush, a maker of online marketing tools, celebrating its IPO. And over at the NASDAQ, also celebrating its IPO, Diversey. It's a provider of cleaning and hygiene products. By the way,
we want to see charities ringing the bell. We don't want any more companies.
What about the banks? We're talking Jefferies. Let's talk about some of the larger names, which are still quite positive for the year. Is that a place to hide?
Well, I don't want to hide in anything.
Okay.
I think you got to like stocks. And I think that when we see what we're talking about, which is that we need to see a cessation of the deals, then I think it's possible for you to say, you know what, we don't need these stocks right now either. Look, it's fine. It's okay. Let them go down a little. They've been unbelievably good. I just am calling for a pause here, David. I'm not saying it's a bear market. I'm saying, well, a little pause. Let these stocks. So Bank of America's done really good this year. Let it hang there for a while.
Right.
But I think that we have to start worrying when QuantumScape and Viacom. By the way, these are both good companies.
Right.
Of the SPACs, QuantumScape's got something. It's got something proprietary.
You believe in with solid state battery technology,
I believe
right? That's what we're talking about.
I think batteries should
be key. It is down 12+% on news of this offering that they downsized but are getting done.
So let's see if it holds.
Yeah.
But it just shows you that if you're in a stock, many of the companies that have come public need equity. So therefore, I think that you don't want to give up on J.P. Morgan. Well, you look at that. You don't want to give up on J.P. Morgan. You don't. I mean, it's just a great company. But at the same time, I mean, if we're all talking about the need to stop SPACs and stop IPOs and stop the supply, well, then there are going to be some people who downgrade these stocks.
Yeah, there are.
Well, how's Jefferies doing on that blowout quarter, David?
Well, listen, it has moved up a lot, like so many other names. It has moved up a lot in anticipation of what would have been what was expected to be a very strong quarter. Now, obviously, part of it may also be that, in particular, at that firm, maybe they're taking market share as well.
Right. But how about the charm offensive that Pat Gelsinger put on? Okay.
From Intel, yeah. Man, you were featured yesterday a lot in terms of at least being the naysayer there. Trying to just rain on Mr. Gelsinger's
That's not
parade.
Fair. I was even-handed.
You were.
67 went to 61. Well, bravado. I think it's terrific what he wants to do. But at the same time, Dave, what I'm saying is that remember the days when someone would say the stock would run up, someone would have something good, and it would just keep going up?
Yes.
Which was like kind of a new kind of money management? Or maybe it was the skimmy people? Skimmy. But now it's like, when you report good news, now people are selling the news is what I'm saying.
Shepard Smith here. Thanks for watching CNBC on YouTube.